Hey everyone, welcome to Money Talks. I'm Bill Barhydt, founder and CEO of Abra, and your host. We have another great show for you this week. The team's been working hard. We've got Ryan Selkis, the co-founder and CEO of Messari, will be joining us. Natalie Brunell will give us her awesome updates on the latest Bitcoin happenings. And of course, we'll cover this past week in the crypto markets, including more congressional testimony. And of course, the big question on everyone's mind is the crypto pullback over? By the way, please don't put your Abra wallet ID in the chat. No giveaways today. You're just spamming everyone. So I see some people doing that. All right. We are going to get to your Q&A in a bit. We'll obviously talk about the markets. But as I said, we're fortunate to welcome Ryan Selkis to Money Talks this week. I've known Ryan for many, many years. He's the co-founder and CEO of Messari, the industry leader in providing information and intelligence about the crypto industry. If you've seen this show before, you've seen me refer to Messari's charts or refer you to their awesome website. Ryan's got a great background, started his career in traditional finance before getting into crypto. He was also in venture. He worked for a company called Good Benefits, where he was managing companies' charitable giving programs. Then he went headfirst into Bitcoin and crypto. And Ryan went on to work as the director of investments for Digital Currency Group, DCG, who acquired CoinDesk in 2016. And DCG is also an investor in Abra, actually one of our first. Ryan started Messari in 2018. And has been at the company's helm since its inception. He's one of the most outspoken voices in the crypto world. You've probably seen some of his Twitter rants recently. In particular, this week on Fox News, Ryan accused the SEC of taking a page out of China's playbook on heavy-handed crypto regulation. And he's been continually critical of the SEC and even announced his intention to run for Senate, which we'll obviously want to talk to Ryan about. And as I said, the SEC Chairman Gensler has been a regular recipient of Ryan's Twitter wrath of late. All right, let's get into it. Welcome, Ryan, to Money Talks.
Good to see you again, Bill.
Yeah, good to see you, dude. So are you running for Senate? What's going on?
Well, this happened at the back of the SEC's subpoena, unlawful subpoena, it seems, at our conference mainnet in September to Do Kwon, the founder of Terra. And I had tweeted something out in part to take back the narrative of our conference. I didn't want people thinking it was like a honeypot where everybody was getting served left and right. And it kind of took on a life of its own, I think in part because I'd been so outspoken the six weeks prior and really starting to kind of roll up my sleeves on the policy side, along with many others, when the infrastructure bill came through with its kind of deeply harmful language related to the crypto industry and certain types of transactions. So that's the context for that tweet. Like I said, it took on a life of its own. I did say 2024 though, which is a long time away. And so nothing this year for sure. And I'll put it to you this way, I'm having a lot of fun running a company, and you've known me, Bill. Do you think I would be happy being one of 100?
I don't know anybody who logically should be. You certainly seem super happy doing what you're doing, and we like you doing what you're doing. So my personal
I'd rather mix it up.
I'd rather have you there calling everybody out for their bullshit, than having to be in Congress and maybe, have some constituents you don't want to deal with. But that's just me. I'm selfish. So,
well, look, I think there's so many variables that go into something like that. It's a long way off in the future. I will tell you that I think the much bigger area of impact on the political side that I could have in the near and medium term is helping to catalyze some of our policy response, and particularly organizing around a more grassroots activist type of organization. Crypto has some really phenomenal policy folks in DC right now, but they necessarily lack a certain punch at times because we're still in education mode. We are still very corporate driven lobbying and kind of advocacy effort in DC. And naturally, when you have a dynamic when the backers of your trade association are big regulated entities, they're going to pull punches because you have to preserve relationships and kind of make sure that you're trying to be proactive and working with the folks that are going to be regulating you, right? So, and that's somewhat obvious. That's not always going to mean that you have every tool in the arsenal at your disposal, particularly the just absolute mob of crypto Twitter users and more generally crypto investors that I think many of whom are swing voters in the next election. So I think that's a lot of what could be activated and what's politically much more necessary at this time and also more interesting to me because I know that's something I could have an immediate impact on without like sacrificing my entire career.
All right, so a couple of things. One, let's rewind because I think a lot of people aren't clear on what you're talking about in regards to the subpoena you mentioned earlier. So could you explain to people what actually happened with this subpoena?
Well, a lot of this came out after the fact, but Do Kwon is based in South Korea. His project Terra is one of the top 10 assets by market cap, thereabouts. It's right on the borderline, I think, right now. And it's a large stablecoin project that has basically become a layer one ecosystem or, an ecosystem in its own right, built on Cosmos. And they do have a couple of projects in their Terraform Labs holding company, one of which is a decentralized lending protocol called Anchor. Full disclosure, I'm an investor in both Anchor and Luna.
Before or after the subpoena?
Before, and I haven't touched. I did take a little bit off the table, again, in full disclosure with Luna, but it's still one of my largest investments, just because it had, it went up 200 times. So it's irresponsible to not take a little.
I'm well aware. Yeah.
So there's many reasons to sell, only one reason to buy, sort of thing. So I'm still very confident on the project. One of the projects that did have kind of came into the focus of the SEC was a project called Mirror, which essentially helped create synthetic assets, mirror assets of, at least in a few cases, US securities, right? So you could actually tokenize and trade a synthetic share of Tesla or Google or whatever. And the SEC doesn't like that.
I'm familiar with this site. Yeah.
Yeah. You know a thing or two about this particular.
I do. I don't know why I'm smiling.
Right. So, and I'm sure your audience does too, as a result of that. So, they, again, and I don't know this because I'm not part of the team, but I think what had come out after the fact was that, and this is public filings. The Doe's team had been meeting with the SEC and trying to be proactive and helpful in their investigation, and then they served him outside of his legal counsel in a very public way. Basically meant to send a message and intimidate him, I think. And there's a certain way that these things are supposed to be handled, and that one seemed like it was a pretty egregious overreach. So that's what caught my attention, and of course, it happened at my conference. So I was going to be, I was a little bit pissed. And the thing that really ticked me off is that we invited folks from the SEC and no one took us up on it. So
did they just go by
instead of coming and learning, you're going to hang out by the escalator bank and serve
so that's
someone
what I heard.
To go on stage with me. And Doe, to his credit,
escalator looking for him.
Yeah, exactly. Doe, to his credit, he got this and he went on stage with me a few minutes after, and it didn't seem like anything had happened. And I think it's because he didn't realize like what he had gotten. He just thought, someone handed him like a pitch or, I don't exactly know, but he, if you watch the panel that we did like immediately after he got served, I tend to believe him just based on how cool he was. I don't think I would have been that cool if I just gotten served. I would have been, as you know, I would have been pretty fired up. So anyway, I think that's playing out. And if you haven't had him on already, I think you probably know Doe already. He'd be a great guest.
Yeah, he's awesome. We're going to do that. Actually, that's a great idea. All right, let's stick with the SEC for a minute. So you have not been Chairman Gary Gensler's biggest fan. Mm-hmm. And can you I don't know how to ask this in a polite way. Can you give us your perspective on why that is?
I mean, to be transparent, he's extremely capable. He is extremely ambitious politically. He views crypto as a net negative to society, I think, and he ultimately wants to, quote unquote, protect people from the asset class. But really, it's just about bringing crypto under his personal control and notching a win and kind of a big public responsibility that I think just serves as a line item on his political resume. And the reason I've been so critical is because I think it's transparently not in investors' best interests. So it's not protecting investors. It's not helping to promote fair, efficient markets. And it's certainly not helping with capital formation in the US. And those are the actual three prongs of the SEC's mandate, right? So, who he really is he's basically a federal version of Ben Lawsky, who I think is one of the biggest sellouts and cautionary tales in crypto's regulatory history. Going back in the archives, Ben Lawsky is the New York superintendent for the Department of Financial Services, and he was the author of the BIT license. And of course, he went from authoring the BIT license, which ultimately shut the state of New York out of a lot of innovation related to crypto because of how pernicious some of its provisions were and how difficult it was to get licensing. And then, of course, he left office and he set up a consulting shop and he advised other firms,
which I think he explicitly said he was not going to do at the time when people were questioning.
I'm clutching my pearls. I'm so surprised. Well, and to make matters worse, and just to show you how dysfunctional it is, he ended up going and serving on the board of Ripple, and of course, Ripple is now being sued by the SEC. So what these people's intentions are, right? It's to capitalize politically, and then it's to make as much money as possible based on the shitty policies that they created in the first place. I think that's happening at the SEC level under Gensler's leadership. And the problem is that he's competent, right? It's not, naivete that is kind of driving this decision making. It's like political power and ultimately just wanting to notch a win that he thinks is important for Senator Warren and other folks that are going to be some of his political allies for the medium and longer term. So that's and in my annual report, as you may have seen, I laid out the 8 or so pieces of evidence against him, and why I think it's so damning and obvious on its face that this is not someone that really cares about his organization's mission so much about personal control.
Yeah. I don't know if you saw the CFTC, the commodities regulator chairman, testified before Congress this week and explicitly said that many of these crypto assets are commodities, which is obviously on the one hand is a little self-serving, but on the other hand is also in direct contrast to what Chairman Gensler on the security side is saying, which is, hey, pretty much all these things besides Bitcoin are securities. And that is, to put it mildly, a little confusing to those of us who are trying to navigate legally, committed to spending millions of dollars a year to navigating the space in a compliant legal manner. It's like you throw up your hand and say, okay, well, you two can't agree. You're the experts that Congress is calling, and you're saying basically the opposite, right? Not that commodities and securities are the opposite, but from a legal perspective, it doesn't reconcile. So what do you think the right thing to do is here? And do you think there's a path to get there quickly?
I don't think that's going to be resolved overnight. I mean, you have two commissioners basically saying, making diametrically opposed statements about the nature of a given asset, and that's going to take a long time to resolve. It's either going to have to be, my understanding is it's going to have to be clarified by Congress. I don't even know if the Biden White House would be able to just make a judgment call here. So it'll be a combination of Congress and the courts where this ultimately gets worked out. From the industry's perspective, I think that's probably a net positive to have these territorial disputes, because it's certainly a net negative if the SEC gets its way. So we'll see, but it's I would personally love to see more CFTC involvement than SEC involvement, because they've just got a much more reasonable approach to crypto regulation right now. I think the chairman of the CFTC, I don't know how to pronounce his last name, Rostin, is it Benham?
Benham.
Yeah, Benham. I think he strikes me as much more reasonable. So yeah, I think it would just, in a self-serving way, it would be a win to have them with more authority. But at the end of the day, it comes down to leadership or lack thereof at the SEC, because there are some really good folks at the SEC that are smart about this, that I think care about the agency's mission, and look no further than Hester Peirce, who's about as polar opposite as Gensler as you can get, in terms of how deeply she's thought about this, about actually solving some of the kind of structural issues, and thinking about working with industry on solutions that could be self-regulatory in nature versus like top-down command and control for a decentralized asset class, which is impossible.
Yeah, and we have a lot of international viewers here, so let me try to put this in context. We have these laws in the U.S. that basically prevent people who make under a certain amount of money from investing in products that everyone making over that amount can invest in, hedge funds and other products. And we call these accredited investor rules, right? Unlike basically a casino where anyone can walk in and bet anything up to the limits of the house, when it comes to regulated products like securities, different rules apply. And it makes no sense. And Hester Peirce, who's one of the commissioners for the SEC, has been railing against this policy for many, many years. And she's absolutely right. It makes no sense, not just from a libertarian perspective, but what is it that, if some wealthy person who inherited their money, in theory, knows nothing special about investing in securities versus somebody who maybe makes $100,000 a year, but has read 10 books on the topic, right? So it's just, I don't know. Anyway, let's have a little bit more fun here with this. I read your awesome report. It took me a couple of weeks slowly to get through it, but well done. I know you're pulling information from a lot of different sources, plagiarizing. I read your, but still, I think that the way you laid it out was really good. And I strongly encourage people who haven't read it yet, even though we're 5 weeks into 2022, to go out and go to Messari.com and read their report. So my question for you is, you outlined 10 kind of like key themes for 2022. We're already 5 weeks into the year. What are the themes that you laid out? I'm guessing you probably started working on this even a few months before the end of the year. What do you have visibility into being like the most important of those themes, and maybe the most accurate of those themes so far?
I think the most important one is the core thesis behind crypto, which is that our institutions are failing across the board, and crypto can present, at the worst case, an alternative and an exit, and hopefully the best case, a restructuring and stepwise improvement over kind of where we are today, right? So it can fix a lot of these organizational issues just by offering new governance structures, new incentive structures, a lot of kind of experimentation that can better align multiple stakeholders in these kind of complex governance systems. Whether you're talking about a company, whether you're talking about the governments at any level, you're talking about social groups or organizations, and I think without that realignment, which I think crypto has probably the best tech / governance and like human design that we've seen as a response to like Web 1 and Web 2, which started decentralized and kind of re-centralized over the big tech companies. I think this is one of the biggest opportunities for us in the years ahead. People are always scared of what they don't understand, the fear of the unknown. And one of the issues is you have like the boomers that are in charge of the big public companies and the big banks and that are running the government. So if they have to learn something completely new and it seems like it's out of left field, and you've got all these apes that are going to be, potentially, people are betting on whether they're going to be in the Super Bowl halftime show. And like, what is this NFT? We were just wrapping our head around Bitcoin, and we know we don't like it because it's a check on inflation. And now you're saying like, I need to understand all these different Twitter apes that are coming out of the woodwork, and the myriad other applications around that. So I understand why people are kind of fearful of it, because it's growing so fast and it doesn't make any sense compared to the world that they're used to. But I think it's going to be a necessary, cathartic transition, and it's going to take some time to get that balance right. But I think this is probably the most important fight we have politically, to make sure that this goes the way of the internet in the 90s versus, goes the way of what I think was like the witch hunt against big tech, particularly Facebook, around the 2016 election, right? And the irony is that whole saga of like Russian disinformation, or does Facebook have to censor people? What is their responsibility? All those things. I think some of those root causes and root alignment issues are actually pretty well addressed in like Web3 systems, because you have governance by design kind of embedded in these, and you include users from the onset. So,
speaking of
I don't think there's a more important issue.
Let me stop you there. You mentioned DAOs and highlighted DAOs, and I think it was bridges, Nifties, and DAOs was the point that, or the one of the top 10 narratives for you, implying that this might be a big year for the DAO model. What is your take on what's happening now in DAOs? Why do you think they're important? What are you looking for this year in kind of this DAO space / market?
I think it's really just about a lot of experimentation and a lot of governance infrastructure that's being built, and participant infrastructure that's being built, right? So there's two components of DAOs. There's the governance structures and kind of norms around a group, and then there's the participants and how do they organize themselves, right? And they're kind of two sides of the same coin. On the participant level, we still have an enormous amount of work and potential to realize around how do people manage their digital identities, get credentialed in like a fully decentralized world or pseudonymous world, build their identities, permission access to their identities as appropriate. And I think NFTs in many respects are a building block of that. And of course, that could apply to like governance rights, within a DAO, right, regardless of what sort of DAO it is. And then on the DAO side itself, we have to think about how are these going to interact with the real world. So how do you get DAOs recognized like the LLC was recognized in the 70s? I think the answer is you probably start at the state level, and Wyoming is already doing that. Texas is, is making moves in that direction to recognize DAOs as actual legal entities, just so you can handle things that actually impact the real world. Like how do you pay people from an employment standpoint? How do you manage taxes? How do you just generally come into compliance as an entity that actually handles finances in some regard? And then so that's all kind of the legal infrastructure side, and then you've got the governance infrastructure side, which is really the connective tissue of decentralized organization. So when people think governance, they think of like board level governance and proxy votes. But with DAOs, the decision-making process, because it's decentralized, essentially means that every single decision comes down to a proxy vote today. Are we going to do this grants program? Okay, who's in charge of it? Like all of those things kind of basically go to the entire user base right now in the V1. And there's some minimum quorum that needs to be hit. And what you end up having is these weird dynamics where the founders, literally have to pick up the phone to the venture capital firms and be like, hey, we really need you to stake your tokens and vote on this, because otherwise we're not going to hit quorum, because no one else is paying attention, because there's no infrastructure to actually do this. Right. So, what that infrastructure is going to evolve to is going to be able to not only fix like the proxy level, board level governance process, but when you take that infrastructure and you add it to this like participant and identity infrastructure that we'll have, you're going to be able to kind of subdelegate authority and basically create decentralized hierarchies. And they'll be much more fluid than traditional, more centralized systems. But you're still going to need to have delegated authority if you want to get anything done and you want DAOs to be competitive with their centralized counterparts in the future. I think that takes 10, 15 years. So this is something that we're investing in at the Messari level, and it's going to be a core part of our business because I think that's a tens of trillions of dollars transformative operating system that's being built. And I think DAOs will ultimately eat all companies, governances, social groups, anything that's online.
I was talking to Andreas Antonopoulos about this a few weeks ago, and he and I hypothesized about cars or Teslas becoming DAOs themselves, where they would literally drive around, collect fees, maintain themselves, and then literally end of life themselves. And some fee might get routed to token holders who basically owned a piece of the car to get it into circulation in the first place. And it's just one simple example of a crazy kind of, let's call it metaverse or decentralized world that I think we're headed towards, that we haven't really even begun to truly hypothesize on. And this token economy that we're all living in and trying to create in our little bubble, because most of the public hasn't even caught up to that yet. Never mind, autonomous cars owning themselves, is just incredibly early. So what excites you for this year, right, the most, and what excites you for like 10 years from now the most?
Messari is a data and research company. As you know, I've been touching information services in some way, shape, or form for 8.5 years now. I know you were one of my first subscribers back when I was still flying solo.
That's right.
In the 2013, 2014 days. I think that's really important. It's the same reason I write the annual report. Yes, we're still early. And one of the things that means is that even as the complexity is exploding across multiple different use cases, multiple different sectors, every single day, every single week, every month, there's something new and exciting and a massive wave of talent, capital. It's a tsunami right now. The people that are starting from zero, because it is still early, just look at this as a $2 trillion big bang type of event that they don't even know where to start, right? Like, all I know is that the charts are going vertical in every single metric that matters: human capital, financial interest, use cases, like real world applications, regulatory attention. Like, I need to know this for my earnings call, just any conceivable metric. It's important. And so the first binary decision that someone needs to understand is, do I need to take this seriously or not, right? The annual report is, okay, read this, or read however much you want. Read the intro, and if you want to go further down the rabbit hole, read the rest. And this can be like your jumping off point to at least understand like what this is, why it matters, and why it's here to stay. And then from there, the learning curve doesn't exactly flatten, as you know. There's a reason that everybody refers to it as like the red pill moment or the rabbit hole or what have you, because there's just like endless opportunity here. It's early, so it's really messy, and a lot of the things are going to flame out, or there's a lot of things that are broken, and but the end result is it is incredibly, incredibly early. So when I think about like founder market fit and like just personal market fit, being able to like hold someone's hand and just like help them get a running start and come up the learning curve, I think is just something that is like perfectly in like the center of my core competence. You mentioned like the Fox News appearance, right? I don't know how many people that watch Tucker Carlson also understand crypto. I had 3 minutes to explain Bitcoin, crypto, why it matters, why it's better for us to own this versus the CCP, and what people can actually do about it. 3 minutes.
And you did a great job.
That's how the world works. But thank you. But like, to be able to like, we have to have, 1 billion of those conversations essentially. Right. So I'm still excited about solving some of the information challenges, the learning curve challenges. And then, you mentioned that section in the theses. I do think interoperability between all these systems, how they talk to each other, that is partly an information challenge. DAOs I think that's an information challenge, right? Like, how do people talk to each other? How do they make informed decisions? How do they improve the velocity of their decisions and kind of delegate authority? And to a certain extent, the NFT applications that I'm most excited about are also an information challenge, but they're an information challenge about like, how do you ascertain whether an individual is competent or belongs to, or like, who is this person? If, you know, the internet, like no one knows your refrigerator, right? Like the old meme. How do you actually like represent who you are, what your values are, what your competencies are, and like ultimately how you can contribute without anyone knowing who you are in the real world? I think those are three information problems at their core, and those are, I think, three of the things that we're triangulating on as a company, me personally, and I think are just going to be really important to run people up to speed, given how crazy things got, from, you know, just from a speculative standpoint in the last year and a half.
Yeah, I think this idea of self-sovereign identity as it relates to NFTs, which isn't necessarily, you know, your DNA identity, but some meme that you own. I don't know if meme is the best word, but it's how I interpret, you know, part of what you're implying. I think it's going to become one of the defining aspects of kind of part one of Web3 for consumers, meaning who am I on the internet in very simple terms, and how do I get to own that? How do I get to identify myself via that? How does it unlock what I want to do versus like a login and password? And, you know, NFTs ultimately are about rights. They're not about JPEGs. They're about my right to the JPEG or my right to unlock the door. And
visuals like that, yeah, like and people, I think, write off the NFT movement at their own peril for multiple reasons.
Absolutely.
But what I actually think is more interesting is like the persistent NFTs, and like, you know, things that won't necessarily be tradable, but they'll start to be more like part of your digital identity. Yeah. And like, Bill, think about my avatar on Twitter, right? Like, how much nuance is captured in like that, like crazy 8.5-year-old, like South Park Studios, like throwaway that I created, you know, as part of like a Reddit account that I thought I'd never use aside from like learning about Bitcoin. You know, like there's you pointed this out, I think the other day on Twitter, right? There's the QR code on the chalice. There's like the backwards hat and the goatee, you know, cause I used to have, you know, facial hair. Fortunately, I don't have a goatee anymore, but no offense to your goateed or mustachioed viewers, but you know, the look of like non-belief / you know, like I'm the dumbest guy in the room, right? Like there's so much that's captured in that image that I think is true and like authentic to my personality, that, you know, if you just see like just the Twitter handle, there's a ton that's like lost there, you know? And I think you can extend this one level further, right? Like, and I actually just did this as like part of our annual report. We had an NFT drop with OpenSea. Well, our digital artist wasn't going to just like make it look like South Park Studios. It was like a Masari branded, like really cool NFT drop with a bunch of like art related, you know, to thematic areas of the theses. We had different NFTs for different top people of the year. And then we had him do one of me. And what does it have? It has like the same look and feel, backwards cap, but now I've got like this overfit suit and tie and still the backwards hat, but it says like TBI 2024. Okay, so that's funny as a joke, but you could envision a future where your digital identity or your digital NFT could evolve.
Grows up with you.
Almost, yeah, evolve with you, and almost like military regalia, right? Like as you're coming up, right, you can literally in an instant start to visually identify, okay, this person is wearing like an American lapel pin, so I know that they're probably political and they're probably full of shit, right? Like, so like that tells you like a ton of information in a split second, and I think that is going to be so much more important as we spend more time in like really immersive like virtual environments. So
yeah. I love this topic. In the meantime, my team is screaming at me in the background that we're way over, but I could actually talk about this all day. I don't know about our viewers, but this is super interesting. Masari, is it Masari.io?
Yes.
Masari.io. I've got some questions in the live stream about where folks can download the report. It is on Masari.io. We'll have it in the show notes on the YouTube and Facebook and Twitter streams. Ryan Selkis, 2-bit idiot, I think is the Twitter handle. Hard to forget. As Ryan mentioned, I've been following Two Bit Idiots since I guess 13 or 14, and you always have really interesting things to say. Subscribe to the newsletter, follow Masari, get the report. Please come back again. Maybe we'll do a midway review of where we are, and then an end of year review if that's okay. And I know we've got a ton of questions in the live stream, which we're not going to get to about the SEC and others. And you can go back and look at them. Maybe we'll post them on Twitter as well. And we can do a Q&A there, follow up. Thank you so much, Ryan Selkis, for joining us on Money Talks. It was a real pleasure to have you here.
Thanks. It was fun. We'll do it again. And hope everyone has a nice weekend.
Thanks, man. Be well. All right. We'll talk soon.
Cheers.
Okay. Wow. That was a lot going on there. So definitely follow Ryan on Twitter. It is not only entertaining, but you actually learn a lot. So, there's not many people who can entertain you and educate you at the same time. Okay. So we went way over on that, but I had to let it go because it was just super interesting. I want to talk for a couple of minutes quickly about one of the trends that we've been following. And this has to do with corporate treasuries and crypto/stablecoins. Okay, so more and more companies are starting to add stablecoins and even crypto to their balance sheets, right? Typically, corporate treasurers don't have a lot of flexibility in determining how to manage cash and reserves. Traditional options aren't very motivating today, given the zero interest rate environment we're in. If you have a savings account at a bank and you see how much interest you're generating, you understand what I mean. It's no different for a CFO at a company. The Fed's easy money policies and traditional bonds and fixed income securities are not producing any investment return worth anyone's time. Of course, the conundrum is that easy money policy drives down unemployment and boosts economic growth, but a significant side effect is, of course, inflation, which makes the cash in the balance sheet, whether it's a company's balance sheet or your personal balance sheet, worth even less. So now we have stablecoins. Adding stablecoins as digital assets to a company's balance sheet can benefit a company, just like it can benefit you in a couple of ways. As you all know, stablecoins are different than other cryptos since they're not backed by, since they are backed by cash and cash equivalents such as treasuries. And holding stablecoins can provide long-term value by earning yield on idle assets. So just like many of you use Abra Earn to earn yield, companies are now able to hold stablecoins in business accounts at places like Abra and some of our peers in the space directly to their balance sheets. And putting a small amount of corporate cash into products like Abra Earn can actually earn more yield than putting 100% into a money market account. And corporate treasuries could use stablecoins to facilitate business-to-business payments or use them to make multi-directional internal or external payments. Cross-border payments become super easy in a stablecoin model. Of course, we all know about MicroStrategy, Tesla, Square putting Bitcoin in their balance sheets. But now we've got companies who are investing treasury directly into stablecoins as well. So it's a perfect complement. Some of your allocation into stables, earning yield, you can earn 5%, 7% in the case of Abra for corporates with pretty ready access to cash near real time, usually within a day or so, even if you're putting millions of dollars into corporate treasury. Ramp, a corporate credit card and spend management company, announced last month that it has been putting 5% of its corporate treasury into stablecoins. Minds, a crypto-focused social media network, converted 25% of its balance sheet into crypto, and 10% of that was converted to USDC. According to a Forbes report, this move is paying off. The 5% allocation to stables will give Ramp and Minds the same level of returns they would see from a 95% allocation to bonds or other fixed income instruments. That is a phenomenal return and actually relatively low risk because you're not actually putting 100% of your cash to work in those stablecoins, where you don't have to anyway to get a better return. Okay, so I can go on and on. Stablecoin streamline corporate treasury management. It's very cost effective. Finance departments can send and receive funds via stablecoins almost instantly. The cost is coming down as we go to a multi-chain environment beyond just Ethereum. Crypto transactions are irreversible, of course, so you get the benefits of cash where you want to have the benefits of cash. And transactions don't have to pass through lots of intermediaries. And so those of you who've ever tried to do a bank wire know the hassles of dealing with lots of intermediaries, especially cross-border bank wires, which are actually a nightmare. Okay. So if you have questions about this topic, put them in the chat. I'll try to answer during the AMA later. By the way, please hit the like button below and subscribe to our channel. If you're enjoying the show, it's a big help to us. Tells YouTube, tells Facebook, tells Twitter they should help promote. So coming up, Natalie Brunell is going to join us with her Bitcoin analysis. And stick around for your chance to, of course, to ask me anything. First, do you want to earn $15 in free CPRX from Abra? Watch this video to learn how you can get some C perks. All right, welcome back. So it's been a big week for Bitcoin. Natalie Brunell is here with the latest Bitcoin and news and analysis. Hey, Natalie, how you doing?
Hi, Bill. I'm doing well. Thank you so much. Yeah, we've got a lot to talk about with Bitcoin. So I'll get right into it. First, let's go ahead and start with the price action. We are chopping around in the 40s now. We even briefly surpassed the $45,000 mark just for a minute there. But Bitcoin remains about 34% down from its November all-time high. So why are we seeing this? Why can't Bitcoin ascend back into that $50,000 support range? Well, I think investors are still going mostly risk off in the traditional markets as well, but certainly in Bitcoin, as we all await the Federal Reserve's decision on tightening and raising interest rates. And we're waiting to see just how aggressive they will be in response to inflation. Inflation, of course, climbing to 7.5% as reported this week. This is the steepest year-over-year increase since about 1982. And the report shows that the inflation has moved beyond just the goods and services that were directly impacted by the pandemic to these broader sectors of the economy. And that means that the inflation could prove longer lasting and harder to shake off. This is something Bitcoiners have been sharing for many, many months now. So the big question mark is, what will the Fed do to rein in inflation? Some investors are speculating that they might be more aggressive, maybe even have an emergency meeting before March to do something. But we've heard from federal officials that they've signaled they're not really comfortable with a large rate hike because that would take the markets crashing down, right? They don't want to prick the bubble too much. They don't want to start a recession, especially during a midterm election year. Interest rates do need to come up, but this is not the 1980s where Volcker was able to hike rates several percent because we have so much debt in the system. So markets are waiting and watching. That includes Bitcoin. Bitcoin has largely been correlated with liquidity during these last few years in this hyper stimulus mode that we're in. And we remain, I think, in the choppy range until the Fed's direction is more clear. But we have had some bullish developments for Bitcoin, especially in the backdrop of the Fed's decision. So let's talk about some of those. First of all, we had a Bitcoin miners ETF approved this week and start trading on the NASDAQ. That was WGMI from Valkyrie. The ETF offers exposure to stocks of Bitcoin mining companies like Argo Blockchain and Marathon Digital. And one of the things I really want to note about this development is the energy aspect, because it's such a hot button topic on mainstream media. Valkyrie's fund portfolio, they announced, is comprised of mining companies that use 77% renewable energy. That is compared to the average renewable energy use in the US, which is just 31%. So this is just, I think, driving more and more green innovation, and mining stocks in general are growing very quickly in popularity. They generated $15 billion in revenue in 2021. That's according to Block, and they grew 200% from the year prior. So very bullish signal, but it did not help Bitcoin's price move very much. So let's also talk for a second about the crypto hack story. I'm sure many of you have been following this, the Bitfinex hack. That was the largest law enforcement crypto seizure in history, $4.5 billion stolen, $3.6 billion of which was Bitcoin, about 119,000 Bitcoins. So the couple accused of laundering the stolen funds, they're getting a lot of attention on social media this week. They're 34-year-old Ilya Lichtenstein and 31-year-old Heather Morgan. They've been taking meaningful wasteful steps, according to authorities, to establish identities in Russia and Ukraine. And I don't know if you've seen some of these viral videos, but they are a little crazy, especially of Morgan. She is a tech entrepreneur. She was a Forbes contributor and a self-proclaimed rapper who posted very eccentric videos on TikTok that have gone viral. And meanwhile, her husband, Lichtenstein, is apparently a dual citizen of both the US and Russia. So the couple is accused of laundering the hacked Bitcoin from Bitfinex to a wallet that was controlled by Lichtenstein. And get this, he apparently kept the keys to the Bitcoin in the cloud. So that's what sort of made it easy for authorities to actually seize the Bitcoin and bring it into the possession of the US government. So the Justice Department said they plan to establish a court process for victims of the Bitfinex hack, which, by the way, dates back all the way back to 2016, to reclaim these digital assets. But here's where a lot of questions are emerging, because Bitfinex is arguing that it made investors whole after the hack. They issued 2 separate tokens and equity shares in the company. So some victims of the hack are now saying, well, you can have your equity back. I want my Bitcoins. They've surged in value. So this might get very complicated for the courts to sort out. And of course, the other question is, how were they able to actually steal these funds? Because that highlights the importance of security, not only around Bitcoin storage, but also these exchanges. So let's talk about some international headlines surrounding Bitcoin. Russia making a move this week to treat Bitcoin as currency. Not really a surprise. The country was already signaling in the direction of regulation as opposed to a ban. And Vladimir Putin has made it clear he wants his energy-rich country to be very competitive, especially in Bitcoin mining. So designating Bitcoin as currency, I think, will just make Russia a little bit similar to the US in the sense that they want to have control over licensing and regulating the exchanges. And they announced that Bitcoin transactions of more than 600,000 rubles, which is about 8,000 US dollars, must be declared. So again, this is their way of trying to track and identify crypto transactions, just like banks are trying to do here in the US. So El Salvador is one of the last stories I want to talk about. They're gearing up to issue their initial Bitcoin bonds. That's going to happen between March 15th and March 20th, according to the country's finance minister. And the $1 billion bond issuance, that'll be launched on Liquid, which you might have heard of. That's a Bitcoin-based service created by Blockstream. And the bonds will come with a coupon for 6.5%. You can invest as little as $100. So the country is very, very bullish on this. In fact, they've reported that the bond offering already has about $300 million in soft commitments, and they're expecting to raise $1 billion that they want to use to build Bitcoin mining infrastructure and harness the power of the country's volcano, which is why they're often referred to as volcano bonds. Now, some in the space are touting that these bonds will help El Salvador pay off its debt. But of course, central banks and rating agencies are saying, no, that's not going to happen. Ratings agency Fitch downgraded El Salvador's credit rating from it's called the Foreign Currency Issuer Default Rating, from B- to CCC. And El Salvador actually has close to $1.2 billion of debt coming due in 2023. So again, the volcano bonds are offering a 6.5% coupon. The 10-year yield on El Salvador's outstanding government bonds are 13%. So we'll see. They do have a lot of debt. And how is Bukele responding to all of this? Well, he says he doesn't care what the ratings agency says. And he has nicknamed his country El Hodlador in a meme this week. He's always memeing in response. And finally, a quick update for those of you following the Freedom Convoy in Canada, the massive protest of truckers against COVID-19 restrictions and mandates. Well, the GoFundMe that blocked distribution of about $10 million that was raised for the truckers, now Bitcoiners came to the rescue. They created the Honk Honk Hodl fundraiser, and they raised more than 21 Bitcoins, 21 million, a lot of money raised. And again, they're able to subvert these third parties like GoFundMe that were trying to prevent the distribution of these funds. So those are some of the headlines I've been following, and I'll send it back to you, Bill.
Okay, wait a minute. I can't let all this go. So first of all, speaking of explosive volcanoes, let's rewind and talk about this couple. I don't know if couple is the right word, but Bitfinex hack. There's something that just, without getting all conspiracy theory here, maybe conspiracy theory, but this doesn't add up to me, right? They're not really on the surface like deep computer science technologists, right? The keys were, I think, in Dropbox, which, by the way, it says something about, how we should think about who's a custodian, right? Because in this case, Dropbox was a custodian without even knowing it. We'll put that aside for a second. Does this make sense? I mean, there's something about this to me that says these may not be the people that actually stole these tokens, even though they're the people who may have actually been, quote unquote, laundering them or storing them, whatever the right term is? I mean, what are you hearing, and what are the people kind of in the know? Have you heard anything in this regard that there's something like, to me, that it doesn't add up, or is this just me?
Well, no, I think that there are so many questions surrounding this. And certainly, when you see some of the photos and videos of this couple, I mean, not to speak not to be disparaging about the whole thing, but you just wonder, like, how were they able to acquire all of these Bitcoin and keep the secret for so long? And you're right. I mean, keeping the keys in the cloud, I think that that's just absolutely bonkers. But it does sort of, touch on that FUD that exists in mainstream media of, it's really easy for not only criminals to transact in cryptocurrency, and this is their sort of safe haven, but also that the government could easily seize it. And that's, again, it's a bit misleading, because it was these criminals apparently that did not have good OPSEC and security and made sure that their keys were in storage somewhere. They actually had it in the cloud. So of course it's easy for law enforcement, if they can follow the dots, they can follow the money trail, they can gain access to these keys. But I really don't understand how this all unfolded. Maybe there's some more masterminds behind it. I'm sure they're coming up with some sort of like umbrella of who's actually involved. And maybe these are the fall guys. I don't know. Maybe this will be a movie someday, Bill.
There's something about this that doesn't add up to me. I mean, if you're clever enough to be able to crack a multi-sig storage system, you're clever enough to not use Dropbox to store keys, or if you are, to store things that are encrypted in a way that even if you read the file, you don't know what you're reading. And clearly that wasn't the case here, because somehow there was a trail of breadcrumbs that either inadvertently or advertently buys the real mastermind. Maybe if like I said, if you conspiracy theories that led them to these folks, and maybe we'll never know, but it would be pretty cool if somebody was clever enough to figure it out. And of course, we haven't heard their side of the story yet. So maybe they do know, and they'll come clean if it's not them. I don't know. But it just doesn't.
I mean, it's so fascinating that she was, at least the woman, she was verified on Twitter. She was contributing articles to Forbes, right? Has this personality on TikTok. And I'm really curious to see what develops, especially just reading all the information about how Bitfinex essentially says, hey, we made investors whole a couple of years ago. So who will get the Bitcoin? Some Twitter folks are arguing that the US government should just keep it, have it on its reserves. And I think one thing that's interesting to note about that is this isn't the first time that we've had civil forfeiture of Bitcoin by the US government. So Bitcoin, the US government does have Bitcoin, but every FOIA request has been denied. I don't know if you know that, Bill, but they will not reveal how much Bitcoin they have. So, maybe they'll keep a chunk of this as well.
Yeah, well, we believe, based upon public address analysis, that they are one of the top holders of Bitcoin, full stop. The DOJ, FBI, whoever it is, the technically Marshal Service, whoever it is that technically manages that treasury, is one of the top 10 holders of Bitcoin in the world, if not one of the top 2 or 3, even besides Satoshi. Which most people say, hey, the US should be buying Bitcoin. Well, they don't have to. They just keep taking it from criminals.
Exactly.
Or suspected criminals. I guess everybody's innocent until proven guilty. But now, all right. So truckers. So our maxi friends love this. I mean, it is just like the second coming for a lot of our hardcore maxi friends who are saying, why isn't this happening in the US? And now I'm hearing that the government is trying to prevent the truckers or those who are getting the Bitcoin donations from being able to access them. Have you heard this? Is that true, or what's the scuttlebutt there?
Yeah. So are you referring to the GoFundMe story? Because that is absolutely what happened. Yeah. So basically GoFundMe said that they would not distribute these funds because the terms and conditions were essentially violated. And so originally, this is what's crazy, because backlash online really helped this. Originally, they were not going to give back the money to the people who donated. They were going to actually distribute the funds to charities of their choosing, which is kind of crazy. And then there was a ton of pushback. So now they're actually going to give it back, but you have to, I think, request the money. If you donated to that GoFundMe page to help the truckers, you have to request your money. And if not, the remaining funds will be distributed to different charities of their choosing. But I just think that's absolutely ridiculous.
Wait a minute. What terms of service were they supposedly violating by donating to this GoFundMe campaign? I don't.
Yeah. So So my understanding is supposedly that the convoy was reported to have violence in the protests, and so that aspect of it as a demonstration would violate the terms that GoFundMe doesn't want to contribute to anything that supports violence. But again, I mean, everything that I've seen, I don't know if you've been watching some of the protests, but it's looked very, very peaceful. There's been so many truckers. Some of the aerial footage, the drone footage is just incredible. The force and the power and how many people have shown up from multiple countries to support the truckers. And yeah, I mean, this is a great value proposition for Bitcoin, because with Bitcoin, you can send it directly. You don't have to worry about counterparty risk. You don't have to worry about third parties like GoFundMe taking a slice, much less all of it. And this is just, yeah, it's been an interesting story to follow. 21 Bitcoin, 1 millionth of all the Bitcoin raised.
Right. Wow. And the other story that I thought was really interesting this week, and I'm surprised isn't getting too much press, is the Lightning launch, and obviously it's a competitor to us, but Cash App, I have to give them kudos for that. I think Jack's been way out in front of this on the Lightning front. I think it's the market needs to catch up with him, but he's willing to put himself out there to say that this is the future of money movement, and I find that admirable. Given that the market is not caught up with them yet, and so we'll see how that plays out. But that's probably the Bitcoin story that caught my eye this week, that really should probably be getting more attention than it is getting.
Absolutely. I totally agree with you. I was super excited when Jack Dorsey was speaking with Michael Saylor last week during MicroStrategy World 2022, because he talked about this. He talked about his company's support of this space, supporting developers, and just allowing the Lightning Network to grow. I think this is super, super exciting because it's going to help spread adoption and allow this to be more accessible. I'm really excited to see how Lightning's playing out. I'm actually going to El Salvador next week, so I'll be able to see sort of the adoption in real time. I'm very curious about it. It's funny too, because I'm sitting here, I don't want to let go of my Bitcoin, right? But in places like El Salvador, this is just in real time. They're transacting in it, and it's a super powerful tool. So kudos to Cash App.
We want to see you doing a Lightning transaction live on the air. So figure it out, get it to work, and please, and then do a transaction for us so we can actually see it working. But no, I'm really excited about this. I think, well, first of all, I can't wait to see what you find when you're down there, and second, I'm pretty bullish now on Lightning. I still have some concerns about economic incentives. I mean, I think for Square, they're in the credit business. There are other reasons why they can do this and still make money. But we'll see how it plays out. I think Lightning's really interesting. Natalie, thank you so much. We're super excited to have you here as a regular contributor and as our Bitcoin analyst. And welcome to the Abra family, and happy and safe travels to El Salvador.
Yeah, thanks for having me. See you next week.
Absolutely. All right, gang. So thanks, Natalie. We're way behind today. So what we're going to do, we're going to get to our market analysis and a couple of questions. And first, Abra is an all-in-one solution for your crypto needs. And by the way, pumped one of our competitors. I got to say, I am, I am using now our recurring buy feature. You can actually buy Bitcoin automatically, right, on a weekly, monthly, recurring basis, either from your bank account in the US or via stablecoins that you're holding in Abra anywhere in the world. We're one of the few apps that has recurring buys from pretty much any country. So anyway, Abra is a safe, secure, easy place to buy, trade, borrow, hold your funds, hold your crypto. When you hold funds in the app, you can earn interest for holding. Here's how simple it is to get started. All right, gang, welcome back. Isn't Natalie great? I'm super excited that she's chosen to join us as an analyst and looking forward to see what she finds in El Salvador next week. We've got some other great guests coming up in the next few weeks. The team at Abra has done a fantastic job. If you agree, by the way, hit that like button. It's really important to us, and it shows us that you care about the content and you support what we're doing. And if you have constructive feedback, put it in the show notes. We listen to it. We take it to heart. If you have questions or comments on what you like or don't like, feel free to put it here in the live stream. And thanks again to Ryan for coming on. He's a super busy guy, and we really appreciate his time. All right, with that, let's jump right to the charts. Okay, so not much to say today versus even last week for that matter. We did recover, which we expected. We did expect. Now, what we don't know, right? So basically, if we look at the Bitcoin price going back a week or so, we've clearly bounced from the third. We were at 36,000 and now we're at 44,000. So that's a solid 20% gain, right? And if you actually go back to the lows, we've got 33 to 45. That's a 12,000 point jump, which is well over a 33% jump. So I'm sorry, over a 40% jump. So it's hard to say, if this kind of pullback is over. It certainly looks like it is. I had identified 43,000 as the key kind of, we need to retake point a couple of weeks ago. And we've clearly retaken that now. And so I believe Bitcoin's pullback is over. Now, let's talk about this chart as it relates to macroeconomics. So yesterday, you can see where the line is here. These red lines are actually coinciding. These red lines over here are actually coinciding with the Fed's the CPI announcement or the inflation announcement. So yesterday, the news came out that inflation is now at about 7.6%, and that's the reported consumer price inflation. Now, I actually think that the real number, kind of factoring out all the BS that they use to calculate their CPI number, is way higher. And you know what I'm talking about. If you're paying rent, if you have an adjustable rate mortgage, if you're feeding a large family, the prices for everything are going up. And so there's no way that this is transitory. At least that narrative has now gone away. And two, there's no way that this is only 7 to 8% for the average consumer. The real numbers are much higher. Now, what are the implications of that for investors, for crypto, maybe stocks? A couple of things I would say. One, I do think the economy is going to slow significantly this year. However, I think prices are going to remain high. This is a real problem for the Fed. That's pretty much the worst case scenario in terms of managing an economy. Economy slows, people start to lose their jobs, prices remain high. So if you raise interest rates, right, because you have high inflation, right, you're actually making the economy the problem worse by potentially increasing unemployment even more. But if they do nothing on rates, inflation is going to increase and prices are going to go up. So they don't have a lot on the shelf that they can bring to bear here to solve this problem. It's starting to look a little bit like the Carter administration in the 70s, when you had extreme kind of stagflation, a term that I've thrown out many times on Money Talks. Now, what does that mean for investors today? Well, from a traditional kind of markets perspective, the bond markets tend to lead the way. And I don't have a chart on this yet. I'll have one for next week, but the yield curve has not inverted yet, means we're not anywhere near a recession, right? I think it's probably 18 to 24 months out. I think we are going to have one, but it's not here yet. Now, traditionally, when the Fed starts to talk about raising rates, before they actually do, what happens is the markets get spooked. But because there's still growth, risk on assets tend to go higher after that. If that holds in this case, we should see a very quick recovery in stocks and an even faster recovery in Bitcoin and Ethereum in particular, and I remain extremely bullish on Ethereum. I'm going to switch to the daily chart here on Ethereum and give you, look, you can see here, we've been going sideways for a long time, right? But if I go to my log chart and go to the weekly, right, you can see that Ethereum has had an astounding run over the last, three years or so, from effectively 86 to now at about 3,000 after a pullback from the 4,000s. And if I zoom out even more, right, you can see that what we're experiencing now looks like noise, right? This basically looks like an up and to the right line from literally 45 cents all the way up to 3,500. And if I do a regression, it's just a straight line right through. I can do it really quick for you here. I probably shouldn't be doing this since I'm not an expert on this, but here's a quick regression that tells you what's happening with Ethereum, right? So, look, I'm obviously not a crystal ball and I'm not here to be your wizard, but I personally am extremely bullish on Ethereum right now. I'm bullish on Bitcoin, but the upside is the slope on the line has changed a little bit, so maybe a little less risky, right? So again, risk is all relative, but the slope here is going to be a little less steep than the Ethereum slope, and it may come down more over time, but still tremendous upside potential here. Right. I don't know if we're going to go sideways for weeks or months still, but at some point I expect another breakout. I don't know if that breakout will come with the next halving cycle or now. My bet, I'm leaning towards this year, another breakout, and I've made my bets accordingly financially, but that's what it looks like to me. So I'm constantly zooming out to get a bigger picture. I don't actively trade Bitcoin and Ethereum. I hold, and I do look for pullbacks to potentially dollar cost average in, which is what I've been doing, particularly with Ethereum the last few weeks, and we'll take other pullbacks as opportunities to do that. Unless some nuclear winter happens, and we'll obviously be talking about that if it comes to bear. CPERCs, lots of you are asking me about that. Let me go to the 1 hour here, or the 4 hour here, and I'll zoom in so you can see basically for the last kind of month and a half, the price has been around 5 cents, very, very stable, almost like a little stable coin. And so I'm holding, actually, I've been buying CPERCs. As I mentioned to you before, while I'm not a price oracle, I personally am very bullish on where CPERCs is going, how we're using it at Abra. Not here to tell you to buy or sell. I just am personally really bullish on where CPERCs is going. So my gut is based upon, understanding macro, understanding the history of rate increases, that the midterm effects of the tapering are going to be fairly muted as it relates to Bitcoin and stocks. And I do expect the markets to recover. I think the indications that the markets or that the economy is slowing will actually be a positive for stocks, because the expectations on rate increases will become muted. And that will cause increases to stocks, crypto, and also real estate as well, which is, again, I'm not making this up. Historically, that is what has happened when we get these kind of strong growth cycles and rate increases are just starting to happen. This is a little bit unique because of the enormous magnitude of money printing, which has caused significant inflation. And the inflation will still be there even if the economy slows. And again, that's the unique problem here that the Fed is facing. That's kind of the wrinkle in my kind of layman's analysis here. But we'll see what happens. I still think, by and large, the markets will show a lot of strength throughout the year, just based upon this idea that the growth won't be as strong as is probably priced in on the bond markets. Okay. All right, so we're well past the show deadline today. Let me take a couple of questions before we call it a day. So let's see. A lot of good comments on Ryan. I really appreciate that. I'll let Ryan know. So a lot of questions about how CPerks works. There's an FAQ, by the way. If you open up the app, you can go to the hamburger menu, the 3 lines in the upper left. One of the menus there is an FAQ, and you can read all about how CPerks works. And obviously, if you click on your membership status or your loyalty tier status in the app, it'll also show you some more details about those loyalty tiers. So all of your questions there will be answered. XRP and some others are asking about taxes. The CPerks airdrop did not create a taxable event in our opinion. And this is my personal opinion. I've talked to other lawyers and accountants about this. The actual token itself did not have a value at the moment it was dropped. And so as a result, there is no taxable event. It has a value of 0 in that moment. Also, it is not liquid. So if you're earning, it's not liquid in the sense of you can't trade any amount of it you want. And so while I'm not a tax advisor, our perspective on this is you should not be paying any kind of income or having a taxable event due to the CPerks airdrop. And again, I'm giving you kind of my non-lawyer, non-accounting terminology here. So I apologize if I'm not using the right verbiage, but that is my understanding. If you have any questions, follow-up questions, feel free to put them in the chat and I'll stay on a little bit longer. LinkedIn user wrote, fantastic perspective on DAOs. I'm big on DAOs as well, but the lopsided voting mechanism can be a very difficult pill to swallow, et cetera, et cetera. Look at time, for example. I'll check that out. Believe the treasury ownership approach will likely be the gold Bitcoin standard for DAOs. Very interesting comments. Definitely check that out. Excuse me here. So we got phone ringing in the background. Let's see. But when is the CPerks going to be listed in Abra Earn? It is coming. I think the launch for CPerks and Earn is coming, but has been delayed. I apologize for that. I don't have an exact day. I was hoping it would be this week or next, but I'm not 100% sure. It's actually fairly complicated for a lot of reasons I'm not going to bore you with, but it is definitely coming. Catherine wrote, Natalie is terrific. Thanks for having her on. I totally agree. Let's see. A lot of people questioning whether there's some conspiracy thing going on with this Bitfinex hack recovery. Yes, Catherine, CPerk staking will be available for all users regardless of their loyalty tier. So no concerns there. EXTXZ Productions wrote, sadly, Salvadorian citizens aren't the ones using Bitcoin. I don't really know. I mean, I don't have a lot of data one way or the other on what's happening in El Salvador. I've heard that it is very hard to actually spend Bitcoin still in El Salvador. So we'll see what the reality is. I went on Peter McCormick's show, What Bitcoin Did this week, and I think it's going to drop next week. And we did talk about this a little bit. And so Peter's got a lot of insights on this as well. Let's see what maybe take one more question. So in trade, please add a 25%, 50%, 75% button in addition to max when trading would be very helpful. Good feedback, Tyler. I will pass that on to the trading team. And so we do have live customer service available in the app. It seems like many of you are not aware of this. If you go into the app, you do a search, you'll see on a support question, you'll see a chat bubble. You click on the bubble and you can actually start interacting in real time with a support expert. It's super cool. And I use it and I've demoed it for many people. It works great. Let's see. Yeah, nice. Love Peter Praskovich. I love Peter too. I'm really excited about this show. It was a lot of fun. We got into some really interesting topics. Okay, so 75 minutes today, long show. So let's call it a show there. Thank you all for joining. Don't forget to click the like button, click on subscribe, share the show on your social media feeds, share it with your friends. We put a lot of effort onto this program. We do it for you. We do it to help people understand where crypto is going, how to get started, obviously how to get going with Abra. And we love the feedback. So keep the feedback coming. And that's it. So have a great weekend. Enjoy the Super Bowl. I'm here in LA for the big game. Got a bunch of events, which I'll talk to you about next week. And in the meantime, be safe. And we'll see you next week on Money Talks. Peace, everyone.